by election counting day. Now, Modi's optimism comes amid turbulent times for the Indian markets. Since the start of polling for 2024 Lok Sabha elections on 19th of April, the Nifty index has been on a wild ride, swinging by at least thousands of points. Meanwhile, the India VIX, a measure of market volatility, has also doubled in just 3 weeks, signaling heightened sensitivity to the election outcome. But Modi remains unfazed. He hailed the market's strong performance under the government's tenure since 2014, noting that the 30-share Sensex has since tripled in the last decade. Moreover, he pointed to the soaring stocks of state-run companies as testimony to India's economic prowess, highlighting their remarkable ascent from what was once considered a symbol of decline. And Modi isn't alone in his bullish outcome. Union Home Minister Amit Shah and External Affairs Minister S. Jaishankar have also stepped forward to address market concerns, attributing recent turbulence to election jitters and confidently forecasting a post-election surge. Shah even urged investors to seize the opportunity and buy stocks ahead of the anticipated rebound after June 4th. But unlike Modi, his cohort, experts remain a bit cautious. They warn of volatility and potential corrections in the final tally for the BJP if it falls short of expectations. According to them, the election outcome is largely discounted and factored in the market price, and the possibility of positive surprises is less and any downside surprise is higher. If the final tally is below market expectation and triggers a sharp correction, experts advise buying on dip for a long-term horizon. However, they anticipate a strong rally in the BJP-led NDA, and if it achieves its much-publicized 400-plus seat target, then the markets could see an all-time high again. And with that, it's time for a short break. We'll be back with more stories on the other side. Keep watching News 9.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
Can the Trinamool candidate from Baharampur hit the ball out of the park?
50-60 दिन बहुत ज़्यादा बोल रहा हूँ, उससे पहले ही काम दिखने स्टार्ट हो जाएंगे.
Pitted opposite Pathan in Team BJP is Dr. Nirmal Kumar Saha.
The fight is not Adit Chaudhary and Nirmal Saha. The fight between Modi versus Rahul Gandhi.
Yusuf Pathan and Nirmal Saha, two professionals who have switched to politics, are taking on Congress leader Adhir Ranjan Chaudhary. Can one of the first-time politicians end his winning streak?
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Gold prices have hit a record high today yet again. This year, the precious metal is up 18% already, and we're just 5 months into the calendar year. The yellow metal has outshined equities in India. Nifty has risen a paltry 3.5%, whereas both mid and small caps have delivered returns of about 12%. At 76,215 rupees per 10 grams in Mumbai, is this the right time to buy gold? Well, the opinion is divided on that front just as yet. I'll tell you who is saying what in just a bit. But all that glitters is not gold, quite literally. Silver, palladium and platinum have also enjoyed a strong rally this year. In fact, silver has outperformed gold, reaching its highest price in over 11 years now at 96,500 rupees a kg. So what's really driving this surge, and more importantly, will the rally continue? Let's dive in. One of the primary reasons for gold's rally over the past weeks is the expectation that US Fed might start cutting interest rates as early as September following lower than expected inflation data in the month of April. Currently, traders are pricing in about 70% chance of a US rate cut in September, according to the CME FedWatch tool. This marks a sharp increase compared to earlier in the week. You might be wondering how Fed rate cuts boost prices of gold and other precious metals. Well, gold as a traditional asset class doesn't really earn interest. When the Federal Reserve cuts interest rates, it makes savings accounts and bonds less attractive due to their lower returns. This prompts investors to seek alternatives like gold, which is considered a safe haven. Additionally, lower interest rates usually weaken the dollar, making gold cheaper for foreign buyers and increasing its demand. Now, these factors combined together drive up gold prices when the Fed reduces rates. On a side note, the sovereign gold bond issued by Reserve Bank of India does pay an interest rate of 2.5% per annum, but generally, gold as an asset and metal does not bear interest. So, apart from US Fed, there is a crisis in the West Asia. Gold's status, as I said, as a gold haven was highlighted again after Iranian President Ebrahim Raisi's helicopter crashed in dense fog on Sunday. This incident added to the sense of rising geopolitical risk in the region, especially after a China-bound oil tanker was hit by a Houthi missile in the Red Sea over the weekend. Israel has also kept up its strikes against Gaza, keeping tensions in the region high. Elsewhere, increased military action between Russia and Ukraine also supported the safe haven demand as both countries launched strikes against each other over the weekend. Amid all the geopolitical and economic upheaval, Chinese consumers have turned to gold as their confidence in investments like real estate and stocks has weakened. At the same time, China's central bank has been steadily increasing its gold reserves while reducing its holding of the US debt. Adding to this trend is the Chinese speculators are now betting that gold prices will continue to rise in the near term. In March as well, the People's Bank of China, remember, increased its gold reserves for the 17th consecutive month. Last year, it bought more gold than any other central bank, adding the most to its reserves in nearly 50 years. So, should you get on the bandwagon and lap up gold as well? Or have the prices run up too much, too quickly, that it doesn't make sense to enter at the current juncture? The analysts are mixed on that one. According to Kranti Bhatini, equity strategist at Wealth Mill Securities, despite a bullish outcome, gold prices may consolidate in future. Meanwhile, Santosh Meena, head of research at Swastika Investment, expects gold prices to rally another 10% from the current levels. So make your choice wisely. And moving on to Byju's now, the mess at Byju's continues and it's getting messier by the day. In the latest turn of events, Rajneesh Kumar and Mohandas Pai are currently stepping down from Byju's advisory council. Yes, you heard that right. The troubled edtech giant on Sunday announced that both Kumar and Pai have mutually agreed to not renew their contracts, which was set to expire on 30th of June 2024. Rajneesh Kumar and Mohandas Pai said in a joint statement, and I quote, "Our engagement with the company as advisors was always on a fixed term basis for at least a year. Now, based on our discussion with the founders, it was mutually decided that the tenure of the advisory council should not be extended. Though the formal engagement concludes, the founders and the company can always approach us for any advice." Their departure comes after a series of board exits and financial woes that pushed the company into legal battles over the last 1 year. Byju's had set up this advisory council just last year to calm investor worries after the company faced several financial and corporate governance issues. The focus areas of the panel were three-pronged: to get Byju's to disclose its lauded financials, help Ravindran rebuild the team, and better communication with shareholders. So what led to the crisis at Byju's? Let's start discussing and unfolding what has happened over the past 1 year. Once a shining star in the startup world, valued at a whopping $22 billion in 2022, Byju saw its valuation drop to just $1 billion, according to investor BlackRock. Another major investor, Sequoia Capital, now Peak 15 Partners, has also written off its investment entirely in Byju's. The trouble for Byju's escalated when key board members led by Peak 15 Partners, Chan Zuckerberg and Prosus resigned over concerns about poor corporate governance. Adding to the turmoil was Deloitte, the company statutory auditor, which quit due to delays in details that the company had to provide to them. In the midst of all of this chaos, Byju's laid off thousands of employees and delayed salary payments. Even its CEO Arjun Mohan has stepped down. To make matters worse, there are several insolvency proceedings against Byju's pending before the National Company Law Tribunal. Although shareholders approved a $200 million rights issue last month, the company can't quite access these funds until the court hearings are resolved. So what does this all mean for Byju's and its future? The company is facing major challenges, from the leadership shakeups, the financial troubles, to ongoing legal battles. It is clear that Byju's has a tough road ahead of it. And with that, it's time for a short break. We'll be back in just a bit.
That ink is a semi-permanent dye called the indelible ink.
We are the sole manufacturer of this indelible ink.
Don't try to repair something which is working.
And if you have facial recognition, you can go vote in any booth anywhere based on where you are, and then it will be recorded that you can't vote anywhere else again.
Can we retire indelible ink and use biometrics? Theoretically, my answer would be yes.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
Inheritance tax is back in the news, but this time it is in the United Kingdom that's making headlines. The debate is heating up and there is pressure on Rishi Sunak to abolish the death tax altogether. The story is in the numbers, and the numbers are huge. For startups, there is a fire sale of sorts likely to take place in the UK's property market. Why? Because of boomers who built houses after World War II, and their kin is currently finding it unaffordable to inherit the property simply because 40% tax that they have to pay on it, and the money they don't have. An astounding £1.2 trillion in inheritance tax is likely to pile up over the next coming decades, and the inheritors will need to cough up that money to keep property that rightfully belongs to them. However, skyrocketing property values and a lack of financial planning could mean that their families might struggle to cover the hefty tax bills right when they are grieving the most. To make matters worse, inheritance tax must be paid within 6 months of a person's death. Now, what happens if the deceased didn't leave enough in savings? Their descendants, already cash-strapped, could find themselves unable to afford their own inheritance. Now, this could lead to a wave of homes being sold, and experts think rightly so. Now that we understand the impact of inheritance tax in the UK, let's take a look at how inheritance tax affects other countries outside of the UK. Now, in Japan, inheritance tax rates are considerably high, with the current highest rate standing at 55%. So this means that after inheriting a property, you will have to pay more than half its value in taxes. In the United States, estate tax rates have been capped at 40%, and this applies to the entire worldwide estate of the deceased. On the other hand, in France, estate tax vary based on your relationship with the deceased and the value of the inheritance that can range from a 50% to a whopping 60%. Now, the bigger question lies in what if a similar tax were to be introduced in India. It is one of the pressing questions as a political storm now brews over the idea of reinstating inheritance tax in India. Now, this debate was reignited by comments from the former Indian Overseas Congress President Sam Pitroda, which led to Prime Minister Narendra Modi accusing the Congress of wanting to take away people's wealth even after their death. Let's take a trip down the memory lane to understand the history of inheritance tax in India. Did you know that the story goes back to at least 7 decades? In 1953, under Prime Minister Jawaharlal Nehru, the Estate Duty Act was passed. Now, this legislation aimed to reduce the economic disparity in India just 6 years after gaining independence. The Estate Duty Act imposed a tax on the total value of property held by an individual at the time of their death, with a maximum rate of 40% on properties exceeding about 50 lakh rupees. Now, heirs had to pay this tax when they inherited both movable as well as immovable assets. However, in March of 1986, the Congress government under Prime Minister Rajiv Gandhi decided to scrap the law entirely. Why? Because the Finance Minister Vishwanath Pratap Singh explained in his budget speech that the estate duty had failed to achieve its stated goal of reducing wealth inequality and helping states finance development schemes. Now, given this history, how severe could the impact be of such a law if families and broader economy were to take the burden? Imagine the financial pressure on heirs and the changes in wealth distribution. Would it help reduce economic disparity, or would it create new challenges for families already managing their finances carefully? As the 2024 general election results are nearing, these are some of the questions worth pondering over. And with that, it's the end of this show. Thank you very much for watching.
I was ready to be a CEO at 26.
Only the guys with the strongest heads can handle hard situations.
There is a blurring line between arrogance and confidence.
This is the philosophy of FC Bayern Munich.